The world's economic landscape is undergoing a seismic shift. Forces that once bound nations together in a tightly woven web of commerce are now pulling them apart, creating new uncertainties and opportunities. The era of seamless globalization, where goods and capital flowed freely across borders with minimal friction, is ending. Political tensions, economic rivalries, and national security concerns are all contributing to a more fractured global marketplace. The United States, once the champion of free trade, is now embracing protectionism, imposing tariffs and trade barriers. This marks a dramatic reversal from decades of promoting open markets and global integration. In response, 7 major exporting nations are reducing their exports to the U.S., recalibrating alliances and dependencies. These countries are seeking new partners and diversifying their trade relationships to reduce vulnerability. This coordinated pullback is triggering supply chain shocks, threatening product shortages and inflation for American consumers. Everyday essentials from electronics to groceries are becoming harder to find and more expensive. The foundation of the U.S. consumer economy, abundant, affordable imports, is being tested as never before. Businesses and families alike are feeling the pressure of rising costs and uncertain supplies. As old trade relationships unravel, a new trend emerges: friendshoring. Nations are seeking to build supply chains with trusted partners, prioritizing reliability over pure cost savings. Countries are prioritizing trade with trusted allies, redrawing the global trade map and forming new economic blocs. Regional partnerships and exclusive agreements are becoming the new norm. Some nations will lose, others will gain, as the global order is reshuffled. The winners will be those who can pivot quickly, innovate, and forge new alliances. The ability to adapt to this new paradigm will determine which countries thrive. Flexibility, resilience, and investment in technology will be key to future prosperity. The balance of global power is shifting, and the rules of trade are being rewritten. Leaders and policymakers are racing to secure their nation's place in this new order. The age of easy globalization is over. A more fragmented, multipolar world has arrived. The future of global trade will be defined by complexity, competition, and the relentless search for stability. China's role in this global realignment is both strategic and transformative, reshaping the very foundations of international commerce and power. Once the world's factory for the U.S., China is now deliberately reducing exports to America, signaling a decisive decoupling. This shift is not just about numbers on a balance sheet. It's a calculated move to redefine China's place in the global order. This isn't just a trade spat. It's a clash of economic ambitions, with both sides vying for technological dominance and future prosperity. China is building self-reliance, boosting domestic consumption, and climbing the value chain, especially in high-tech sectors. The country is investing heavily in research, innovation, and education to ensure it leads in the industries of tomorrow. By restricting exports of semiconductors and advanced electronics, China aims to shield its tech industry and disrupt U.S. supply chains. These measures are designed to protect its own technological advancements while making it harder for rivals to catch up. Beijing's message is clear. China will no longer depend on American markets or technology, and is determined to chart its own independent course. The government is fueling domestic innovation, targeting a resilient, inward-focused economy. Massive investments in startups and homegrown tech are laying the groundwork for a new era of Chinese economic leadership. This pivot marks the end of U.S.-China economic integration and the rise of competing global spheres. The world is witnessing the formation of new alliances and rivalries that will shape the next generation. As China turns to Asia, Africa, and Europe, the world's trade flows are permanently altered. New partnerships are being forged, and old dependencies are being broken. The global economy is fracturing, forcing nations to choose sides in a new era of competition and uncertainty. The choices made today will echo for decades to come. The trade realignment is reshaping relationships close to home. Mexico, long tied to the U.S. market, is now cutting key exports like auto parts and produce, seeking economic independence. By diversifying trade with Latin America, Europe, and Asia, Mexico aims for resilience and less vulnerability to U.S. policy shifts. Across the Atlantic, Germany is also turning inward, prioritizing the European single market over transatlantic exports. Tariff disputes and regulatory clashes have pushed Germany to strengthen regional supply chains and pursue European self-reliance. This shift is part of a broader European push for strategic autonomy. By focusing on intra-European trade, Germany and its neighbors are insulating themselves from global turmoil. Europe is asserting control over its economic destiny, no longer content to be shaped by US or Chinese interests. The message: the future lies in regional strength and independence. The US-China rivalry is forcing Japan and South Korea into a careful balancing act. Japan, a US ally with deep ties to China, is quietly reducing exports to America while diversifying trade across Asia and the Pacific. This strategy hedges against volatility, building resilience through new partnerships with Southeast Asia, India, and Australia. South Korea, a global tech leader, faces similar pressures as US restrictions on China disrupt its supply chains. Korean firms are cutting US exports and investing in domestic R&D to reduce foreign dependence. Both nations are seeking new markets in Europe and Asia, aiming for economic security amid uncertainty. For American consumers, this could mean pricier electronics and fewer choices. For Japan and South Korea, it's a necessary recalibration for survival in a fractured global economy. The region is adapting, prioritizing flexibility and self-sufficiency over old alliances. The global trade shakeup is transforming agriculture in the southern hemisphere, and nowhere is this more evident than in Brazil. Once primarily focused on traditional partners, Brazil is now at the center of a dramatic realignment in global food supply chains. Brazil, a top food exporter, is redirecting massive shipments of soybeans, beef, and coffee away from the US and toward China. This shift is not just about numbers, it's about forging new relationships and adapting to a changing world. Driven by China's vast demand and willingness to pay higher prices, Brazil is following economic logic, not ideology. Brazilian farmers and exporters are seizing the opportunity to expand their reach and secure more profitable markets. This strategic pivot is helping to secure Brazil's economic future and cements its role as a vital player in the global food chain, ensuring stability and growth for its agricultural sector. For the US, the impact is direct and immediate: higher feed costs for livestock producers and rising meat prices for consumers, as Brazilian exports increasingly flow eastward instead of north. The move highlights how developing nations are leveraging their resources and negotiating power for better deals, challenging old hierarchies and rewriting the rules of international trade. Brazil's strategy is a bold assertion of economic agency, skillfully playing global powers against each other to maximize its own advantage and influence. Emerging economies are no longer passive participants. They're actively shaping the rules, forging alliances, and driving change in the global marketplace. The result is a more competitive, multipolar world where trade patterns are being redrawn in real time, and traditional power centers are being challenged. The global food systems balance is shifting rapidly, with ripple effects felt in markets, prices, and dinner tables worldwide, signaling a new era in international trade. India, the world's pharmacy, is making a pivotal move for health security. As the top supplier of generic drugs, India is now restricting exports of key medicines and pharmaceutical ingredients. This isn't hostility, it's a response to pandemic-era shortages and a drive for national resilience. The Make in India initiative aims to boost domestic production and reduce reliance on imports, especially from China. For the US, this exposes a critical vulnerability: dependence on Indian generics for affordable healthcare. Reduced exports could mean drug shortages and price hikes for American patients. India's strategy reflects a global trend: nations prioritizing essential goods and self-sufficiency over cost efficiency. The era of unchecked pharmaceutical globalization is ending. Health security now takes center stage. Amid global trade turmoil, Canada is emerging as a big winner. As US supply chains falter, Canada's stability and proximity make it the ideal partner in a new North American bloc. A recent multi-billion-dollar trade deal cements Canada's role as America's most trusted supplier. This is friendshoring and action-building supply chains with allies who share values and interests. Canada's skilled workforce, resources, and integrated economy offer US companies a secure alternative to riskier regions. The Canadian government has actively positioned the country as a safe investment destination, especially in critical minerals and clean energy. This shift deepens US-Canada integration, creating jobs and more resilient supply lines. Canada's rise shows how trust and alignment are the new currency of global commerce. In a fragmented world, the US-Canada partnership is stronger and more vital than ever. The coordinated pullback by major exporters marks a tectonic shift in the global order. The age of hyperglobalization is over. Resilience, security, and trust now drive trade. The US faces tough adjustments, shortages, inflation, and the urgent need to rebuild domestic industries. Friendshoring and strategic autonomy are the new priorities, as nations refuse to trade security for savings. The pandemic and geopolitical shocks have exposed the risks of dependency. Countries like Germany, Japan, and India are building regional supply chains for stability. The global village is giving way to fortified economic neighborhoods. The unipolar era is gone. A multipolar world with new centers of power is here. The future belongs to nations that adapt, prioritize resilience, and reclaim control over their economic destinies.